Hey, what's up, everybody? Welcome in. Getting ready for this FOMC event today. See if any opportunities arise. Welcome in. Welcome in. Let me know in the chat who's here. Get into some analysis, things that I'm watching for here during this session for the afternoon. Some key levels that I'm watching for. See if anything sets up. That's good quality. At least a few minutes after the news. What's up, everybody? All right, so let me take a screenshot here of my other chart, and we'll take a look at the volume profile and some areas that I'm watching out for here. So the market already sold off a good bit this morning in the pre-market into the opening session here. So we already had a good sized move, and then since then we've kind of just been grinding our way around here in this channel, right, coming into this. So really the only things that I really have to the downside here are these couple prior lows around 6,700 to 6,715. I talked about that in the pre-market session this morning. If those for any of you that were in there this morning. Good afternoon, Xavier. Welcome in. Thanks for coming and hanging out here this afternoon with us. So let's just talk about some the closest key levels that I see, which is one. We had, I think, some water. Sorry, guys. What's up, Formal? Gagandeep, welcome in. Good afternoon. So we're basically kind of in the middle of this range from this week. Actually, let me pull up the week chart here. We're like dead in the middle of this weekly range, I think. Pulling up a weekly chart here, drawing a fib on that. I was just curious about, so the 50% of this week is around 67.35. We're just a few points under that, right? So we're pretty much just in the middle of the weekly range. Actually, you know, next thing would be curious to see here is just looking at a volume profile of this week, just the whole week volume profile. $16. I think this will be interesting. Nothing too key standing out to me, really. Point of control from the week is still up there around 67.70s, which is where I have this area marked. So that's interesting there. Okay, so we're kind of in the middle of the weekly range here, coming into FOMC, which is also in the middle of the range from the week before that, roughly, right? So kind of a middle of the last 2 weeks range, really, here. Middle of the range from the last 2 weeks. How do you like that? So the nearest key levels that I see is really these lows down here, prior lows around 6,700, 6,715. This is where the market tried to break down, and this is where things kind of flipped. We can see on the volume profile, We had a lot of volume transacted down there, tried to auction lower, failed, and then this is where we started shifting volume higher as the market kind of traded higher this week. Kind of hit this point, had a lot of absorption here overnight, failed and rejected on the PPI news this morning, and then shifted volume lower again. So now we're kind of just in this range here where we can see the volume distribution, value area high, value area low, point of control here. So what I'm kind of watching, which we're opening up, not opening up, but we're coming into the news really close to, is these prior lows here, right? We could see a quick drop down there. If that recaptures with aggressive buying, then we may shoot back up here towards point of control at least, right? That might be a scalp opportunity there. If we break that down, I don't really, if we break that down and hold under there, my colors are kind of inversed here, guys. Then I don't really see us. I don't see much from like flipping the week red right down there again. If you look at last week, at one point, last week was green, way up at the highs above 6,800, 6,850s, contract adjusted, and now and closed way down at the low. So that could be something similar. And we continue to see on ES over the recent weeks how it has traded lower. If we do pop up here, this would be an area that I would watch either to reverse from or break out above, which is that point of control. This is actually the point of control area from this week as well. So you can see the most volume transacted right there. That was also where the market closed, and we can see there's a low volume area there as we broke through that the pre-market this morning into the morning session. Right, so those, and that is kind of around 6780s, 6700. So those are kind of the nearest key levels that I'm watching here. You can see the tape thinning out here. You can see all the orders on the heat map pretty much pulled here. Still this one down here at the lows. So good afternoon, Mohammed, Tendra, 84, welcome in. Nice to see you guys. Thanks for tuning in, hanging out today. How's everybody's trading been going this week? Let me know. Are you guys finding a lot of setups in these more balanced sideways conditions or less? So we had a nice move, early in the day. I liked some of that, but for the most part, this is probably the main thing that I was looking at this morning was this failure around this anchored VWAP level. But again, in the moment, I didn't take any trades on it this morning. In the moment, it was pretty choppy here. There's a lot of aggressive buying. It was just pretty choppy. It did eventually work. That was my game plan this morning, was to spot a reversal failure around 67.50 to 60 range to look to short that and target, break towards the lows. Didn't take it. Personally, just didn't take it. It got too choppy. It got too kind of uninteresting to me. But it did eventually work. We did eventually break down. So far, though, large positive delta today. There's been a lot of aggressive buying. Yeah, it's just a lot of whipsaw, Andrew. I agree. Matt, what's up, Matt? What's up, man? Yeah, a lot of whipsaw. Even before we get decent moves, just a lot of whippiness, in that here, right? Just from 9:30 all the way into 10 a.m., it was just a whipsaw, and then we finally hit one last high and then it rejected. So that was the setup that I was looking for, was a rejection there, but it just didn't have a feel for the conditions there, didn't trade it. So I'll show you one more thing. I'm looking at a volume profile here of the last 2 weeks, which were right in the middle of this range from the last 2 weeks. You can see how pretty balanced here overall. Here comes the news. So pretty balanced here overall, guys. Right around right around there. And the highs and lows of the bulk of that volume range kind of align with 6,700 and 68-ish. So little aggressive buying here. Let's see, what was the it could, Tendra, that would be, could, Tendra said, could that big positive delta also mean a lot of short covering? It could, that could be an interpretation. I know rates remain unchanged, no surprise. So no surprise, nothing's changed. What will be interesting today is at 2:30 for the press conference, listening in to see if they give insights about kind of what's next for interest rates. I'm not going to try to necessarily interpret those fundamentals, right? But I will just pay attention to that. So value area high of this range from the last 2 weeks is right around that 67.80, which is right around that key area that I drew. And then low is right around the 6720, 6700 area. So that's interesting. I didn't even look at this before, but these areas that I marked, just looking at the volume profile, 30-minute charts from this week, also aligns with kind of the value area high and value area low of this range from the last 2 weeks. So that same, I didn't even realize that till now, drawing this volume profile on this 4-hour chart of this range that we've been in the last 2 weeks. But looking at that now, those same, and I'll bring this up again. I didn't even notice this, but just kind of these key areas that I was looking at on this 30-minute chart around here and around here also aligns with that area of the last 2 weeks sideways range that we're in, that value area low and value area high. Very similar overlapping key areas. Hey, Clayton, welcome in. Welcome in. So let me see if I can find, you guys want to listen in for the FOMC press conference? The Federal Reserve. Are you guys able to hear this if I put this on? Do you guys hear this on stream? Let me mute this because I don't want to hear, but I do just want to know if you guys hear this on stream. Is that patching the audio through or no? No audio through there? Let's see. If I put it on my speaker, it'll just come through the mic. You guys tell me if that's annoying. I'll mute it if it is. Let me put it on my speaker here. Do you guys hear that in the background? Educating students and empowering consumers when it comes to understanding and participating in our coming through the mic economy. For more information, visit federalreserveeducation.org to find links to resources and Reserve Bank programs offered near you. Do now? How's the audio quality? Is it good? We're experimenting live here, guys. Sorry. It's good? Okay. I'm going to mute it for now because it's just like on nothing. It'll be on at 2:30, so I'll pull it on at 2:30. We can listen in. It's going to be delayed anyway. It doesn't have really much impact, but pull it on. So between now and 2:30, I would expect more volatility around 2:30 when Jerome Powell starts talking. So we'll see if that, brings about anything that we want to trade if it drives price to these key areas where we're interested in trading. All righty. Let's see. So let me know in the chat if you guys have any trading questions that you want to go over, any trading concepts that you want to go over. This is a cool kind of hangout open mic time here until we see some of our key levels trigger if there's a trade setup opportunity. For me, very importantly, recently has been super important just to focus on key levels. No, I didn't take a trade. I don't even remember the last time where I basically have gone 3 days in a row with taking no trade. Like being in the charts all day and just not taking a trade. Monday, Tuesday, Wednesday now, I haven't taken a trade. So the main setup that I was watching, and we can talk about it if you guys want to review this morning. So the main setup that I was watching, and I went over this, I was on stream live today with the private community that I run for coaching and mentorship, Flipping Futures. If you guys are in there, this is the main setup that I was watching this morning, which was a rally into this area around this anchored VWAP. There was other confluences there as well. There was a low volume node there. So a low volume area, which we see here where selling was really aggressive. It was also on the break of prior day lows, just under 67.60s. I'm talking about the regular trading hours lows. So there was a few things. Why am I getting notifications? I went mute. So there was a few things there that made that a key level, as well as my anchored VWAP here. And you can see how well this anchored VWAP rejected today. So price rallied up here, and I was interested in taking shorts here. However, seeing it reject multiple times and then price just continuing to consolidate. Obviously, we know the price sold off from here, but in the moment, right, looking at this, it just didn't look like a very solid, clean rejection, right? So if we look at this time period where I was watching from 9:30 to 10, in the moment here, I just didn't see a very clean rejection. Confirmations, it was, I was seeing the absorption here. And if we look in on the heat map here, we see this area here, we see this area here. So each time price popped into here, there was absorption. We see passive sellers on the heat map stepping in and absorbing these highs around this anchored VWAP. So that was confirmation. I saw it, I talked about it live. I just didn't, I wasn't so fond of it that I was willing to, swipe my card and put risk on for it, if that makes sense. Every time I take a trade, I think about it as if I'm like, what's my stop loss for the trade? I'm paying that much to be in this trade, right? That's how it's costing me this much to be involved in the market here. And I just didn't see anything that made me feel like it was worth it there. So, but nonetheless, we continue to see that and look as we go kind of play by play here. So each time we popped in the high, we see this on the heat map here, see it on the heat map here, here. There was a passive seller stepping in and absorbing these aggressive buyers just under this anchored VWAP. This anchored VWAP is anchored back to beginning of February when we started getting really sideways in that range. I started anchoring my VWAP there. Here it is. That's the settings for that. And so it's been working really well, and I really like that, to use anchored VWAPs on different points that are relevant to the current conditions. Yeah, Clayton, are you in the Discord? Clayton's in here, posted in here. I can't share a screenshot in YouTube. Yeah, I thought so. I don't always recognize everyone's different screen names on YouTube and Discord and everything. So let me see here. Let's see my anchored. There you go, Clayton. All right, so you can see that was what I was watching for this morning. It did end up working. We rejected down to these lows. Now I was watching kind of these key lows where we saw that and we started to see some absorption and reaction there. Again, took no trades on it. I then became more interested on like a retest of this to short, which again played out, but it was too late in the morning for me. And I was just too wary of price action getting choppy, going into the FOMC event today. So there wasn't, we saw something similar actually to this over here, how we popped up into here, absorbed, and then kind of continued to grind lower. So it's been kind of just an up and down kind of channel like grind today in this range. And that makes sense just looking at the volume profile. It's just an absolute block of volume in this range today. So not exactly an area of high quality to trade for me. Show you what I mean here. So this is that area that I talked about that also aligned with that anchored VWAP from this morning, right there around 50 to 60 range, right? And that occurred especially on the break of prior lows there, these regular trading hours lows from yesterday. Then we had that pop back into there. That's where we had that anchored view. That's where we had that anchored VWAP level too. That was right there, right? And we were seeing that. But ultimately it was just a little too choppy, didn't like the conditions. And then since then, you can see kind of a big old don't touch it zone there of volume. Good questions, good questions. So we got 15 minutes, 17 minutes. 17 minutes until the press conference that may drive some more volatility to our levels. The other big thing is Friday is contract expirations for a lot of options and futures. So Friday's a big one. We may see an imbalance occur, may nothing occur. It may continue to just kind of be like this, kind of whippy into the end of the week here. Maybe after expirations, there's less hedging occurring and stuff like that, less rebalancing occurring. And then maybe we see some better opportunities in the markets next week. Maybe. That's what I'm speculating, hoping. Man, pretty low volatility for a FOMC rate decision. I guess there was basically no decision. The decision was there's no decision, right? Keep rates the same. Yeah, so as far as volume, Gaga Deep, if I'm looking for directional continuation, right? If based on my analysis, I'm looking for directional continuation. If we look at a low volume area in the market, we would understand that there's very aggressive participants there. If price moves so fast that not a lot of volume transacted, then those sellers were really aggressive. And so if price retests that area, it would be key for me to see if those aggressive participants defend that spot, especially like when that occurs, like with the break of prior lows. So on the break of those regular trading hours lows from yesterday, which were also near the close, we saw fast, aggressive selling, right? So that became a key area, low volume node on a break of prior lows. And it also aligned with that anchored VWAP as well. So there was like multiple things there that were like, okay, watch out for a retest here if we're going to see continued direction. How should I deal with extra trades when I take before my real setup on my key? And I take it eventually, but those profits doesn't matter because I already lost. You need a setup, like a checklist for your trade, right? It sounds like you're getting in too early with FOMO because you're afraid of the setup happening before all your criteria hit. And you need to understand that the only way of making money long term is by having a systematic edge that you can repeat. And so you're trying to make money just one time right now without all of your criteria triggering, because you're too focused on like making money, hitting a payout, whatever, right? And you should be focused on, okay, can I consistently execute this exact trade setup with X, Y, and Z criteria every single time for the next 100 trades? That will give you a consistent, if it's a good setup and you have a good process in the market, then that will give you a positive expectancy over time if you do that. But you're too focused on like making money right now. So you're just clicking buttons without all your criteria. So you need to have limits. One, as far as how many trades in a day you can take, right? Maybe limit yourself to, if that's a real problem for you, 1 trade a day. You get 1 shot, right? Every day, and then go through, journal and everything, document it, etc. And then when you're done, after you take that 1 trade, everything shuts off, right? And go through your criteria, right? So let's talk about this because this is good. So at a minimum, right, you should have 1, what is the market context for your trade setup, right? Go through, if you have to, literally get a pen and paper and write this down as you're analyzing the market. Take your hands off the keyboard and mouse and look at the analysis on your screens and write down, what is the context for this trade setup, right? Is the market downtrending? Is the market sideways in balance? Is the market uptrending? And does the setup make sense in that market condition, in that market context? 2, like, what is the location? Okay, so what is the location for that setup to trigger? Is it a prior high or a prior low? Is it open, high, low, and close? Is it a low volume node? Is it a supplier demand zone, right? It needs to be at a key location. So that no matter if you see confirmations or you just like the context, whatever, it doesn't matter unless the key location is triggered. The key location is your trigger, right? The context is, okay, now the setup is developing. The location, okay, now the setup is triggering. I can look for this setup. Prior high, prior low. I'm just going to giving you some examples, right? So, prior day, high / low, low volume node, supply or demand zone, or, key level support resistance, whatever, right? So that's the trigger 2. And then 3, what are the confirmations that you look? And you want to be consistent and repeatable with all of these things over time, with not 1 trade, but many trades over a period of time. You need to be very agnostic to the short-term outcome. You need to be very like, I don't care about the short-term outcome. I only care about these check marks. Did these things all align, right? So I can be consistent about these things. I can build a positive expectancy over time, right? So what is the confirmation? Do you look at order flow to look at like absorption? Do you look at a price action structure, like a fair value gap to form after a consolidation or something like that, right? You should have more than one. You should probably have several confirmations, right? So one could be absorption. If you look at order flow, one could be, aggressive participants trapping that absorption. A price action thing could be a double bottom and a break of structure back to the other direction or something, a break of a trend line or whatever your strategy is, right? So you use order flow and look for absorption. Okay, so do I. So you could look for, okay, so prices downtrending, right? We break a prior low, right? And we see large absorption. Okay, that's context and location, right? Prior location is prior low. And then, we see aggressive buying trapping them, right? So that's one confirmation. We see, a weaker pullback from smaller participants. That's another confirmation, right? We see a bid stepping in and defending that, a passive buyer. Okay, that's three confirmations. Now, that's my ticket, right? I've got context, location, I've got three confirmations. Now I'm green light to be a buyer, right? And you need to have all those check boxes marked, right? So you need to stop having, partial one, partial two, partial three, and then just green lighting yourself to click buttons because you don't want to miss the move, right? You gotta wait and put a checklist together for yourself for your setup, and literally make sure you do it. And you got to let go of wanting a short-term outcome that may be driving you to enter early because you don't want to miss out. Does that make sense? True momentum. Yeah, no problem. Thanks for tuning in. Hope that helps you, man. I mean, if you're struggling with it, many other people here, I guarantee you, are struggling with it. I've struggled with it, right? So it's good for people to ask questions because likely many people here are having the same struggles. Promise you, you're not the only one. So we got a little up and down move. We're still just middle chop here. Get an updated view here. Updated view, big old chop fest here. Not touching it. You can see these are this is a ES 30-minute chart. So you can see 30, 60, 90, 120, da 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 math. We've spent a long time here. Spent a solid amount of time in this range here since 10 a.m. this morning. We've just been up and down, up and down, up and down, up and down in here. Good questions, guys. Did anybody else in the chat find that helpful to what true momentum? Does anybody else find themselves in a similar situation to what true momentum was talking about there? Let me know if you can relate. Clayton can relate. Anybody that says no, well, at least if nobody says no, we'll know that it's not true. Lots of people are struggling with that same thing. So let's talk about NQ. Take a look at NQ. I didn't talk about NQ yet. It's mostly the same, but it's held up a little bit better. Adam said definitely been there, still finding the nuance between too early and too late. Yeah. So NQ still above this area of interest. So we had this area. Why is it on that color anyway? I don't know. Sorry. So we had this area here where we saw these overnight highs. And then we had this consolidation in the pre-market yesterday, and then we rallied out of it aggressively. We're still holding inside that zone here on NQ, even though we are also making our way lower, right? We're still grinding our way lower here, but holding up. ES has come all the way down to these relative lows so far. So continuing to just note that there's a little bit of less exaggerated downside relatively on NQ. It's holding up a little bit better, Let's see here. Other than that, I did mark this range here. This is kind of a key area that I was wanting to watch. Didn't talk about this too much this morning because I was mostly looking at ES, but we got slightly above there and then rejected under there. Hanging out at an old gap fill level. Yeah, I think there was a gap here. I had that on my charts a while ago, but I've since removed it. You're talking about that gap down from last week. Start of last week, we had that gap fill that we then recovered. Yeah, once we traded up and down through that a couple times, I removed it. But it's funny that that works out that way, that we're now kind of consolidating sideways in that same gap area from 2 weeks ago. It's no longer on my charts, but I remember it. I'm still aware of it. Kind of a mess here, guys. If I'm being honest with you, kind of a mess here. All right, so where's that thingy? I don't know where to put this. Put it right here. Actually, how's that?
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic
So stop spending money, people. Save your money so we can get lower rates.
Will rise 2.4% this year. And
Are you guys able to hear this?
Somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little.
Let me know in the chat if you guys can hear this.
Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force.
Okay, cool.
Due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments. So
we're starting to drop into those prior day lows now here. 67.15 to 6,700.
In our SEP, Fomc participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net, we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box.
So I just caught this for Scout here. I'll talk about it after we listen to this.
Energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind. And the question of looking through when it does arise will be one to approach.
Yeah, I long that dip for a quick scalp with the buying momentum. We saw the absorption here. I'm listening to this. I'll talk about the setup after this, but it was just a fake out dip under those prior day lows. Remember the recapture? So remember we talked about 67.15 prior day lows. Fake out dip under it, absorbed, aggressive buying, recaptured it. We'll talk about it in a minute. Just a quick little base hit scalp here.
It didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people.
I'm looking to see if any other opportunities develop here.
2 to 1, let's say. 2 comes to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation, not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year, progress on tariffs, going through once and then the tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that.
Still watching this zone here, 67.15 is that prior day low. I liked the momentum just for a quick scalp. Now we're pulling back. We'll see if this zone actually holds again for a bigger play or not.
Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result?
So what I'm looking at initially is this area where we had this larger absorption on the break of that 67.15 and recapture. Now I'm looking to see if it holds again.
That will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods.
My target was just that volume peak area, just breaking above 20s there, which was also around where this high was. Just a quick scalp up into it. A little over 2R, just take it off. Base hit.
On tariffs, which we believe we will see. It's just a question of how long it takes.
Aggressive selling kind of dropping back in here, but there are some bids that popped up here around 67.08. If we come back under here, the next thing that I have my eyes on is that 6,700.
More due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas.
Strong selling through that there. So no more trade on it here for me. The next area that I'm looking at is the 6,700 area.
Potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there.
Let's take a zoom out here.
Wealth effects as well.
To be honest with you, you know,
Is the rate forecast
I was
likely
watching
to
out for a
be
potentially
temporary
stronger pop there,
because
and
you wanna be sure your position in case
just took it all off at my first target there. It did not get as strong of a pop.
You know, the economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. You know, to your point, if we have high, you know, if we have a long period of much higher gas prices, that's going to weigh on consumption, not weigh on disposable personal income, and you know, weigh on consumption. But we don't know if that's going to happen. It's something quite different than that. We might have much lower than expected pass through. So people write down at, you know, this is one of those SEPs where a number of people mentioned
Might have just barely broke the lows.
An SEP, this would be a good one because we just don't
And
know.
try to recapture it. I don't
wouldn't
know.
say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write.
That was
something
those
down.
lows there.
And
We
this is
dipped
something
under it
that
one
is,
more time.
that
Personally,
worked out.
For
And
me, on that type of
so,
fake out
you know, we don't
little
dictate
dip,
how long-
I'm going to try it one time. And if it doesn't hold and it chops around there, it comes back again, I'm not trying it again. Best reactions happen at the first test of a level.
To move too far away from that just because you don't know, it's so unclear what the direction from this particular end will be. Meanwhile,
Although if it does hold, it may be good from here, but I don't know. We'll see.
And inflation, the overshoot is mainly from the goods and tariffs. And you know, the labor market
Strong buy-in coming back in. It's not invalid yet. We dipped that low one more time, but we're still in that zone.
You have a very, very low
Remember,
break-even rate apparently for new jobs.
I talked about this zone before this even started here, guys, and we drew it and we shared it.
You know, pretty well.
Right.
It's just we don't know what the effects of this will be, and really no one.
This zone here, value area low from the last 2 weeks. We talked about it. I just took it for a quick little scout off the initial reaction.
Higher oil prices, they have a hit to consumption, which I was talking about, but that's somewhat offset by increases in domestic production. When you talk about that dynamic, especially to the extent that and how much U.S. production is happening right now.
So the first thing is there is, you know, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past,
yeah. So there'd be an offset.
Offsets, yeah.
So that's true. You know, we have, we're a net exporter of energy, right?
And
so
this thing is super dead. Oh,
economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling.
honestly, was expecting a little more of a volatile reaction here.
You know, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, but meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock will undermine the credibility of your commitment to the 2% target?
You know, we have to do our analysis and you know, think these things through carefully. But of course, that's on everyone's mind. You know, we're well aware of the history, but you don't want to overreact to that. You know, you want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, you know, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be actually, and you know, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can.
Not really seeing anything else at the moment, guys. I tried that once, caught a little scalp off of it. It was a 7 point scalp there, 3 point risk. But
to doing what
we
it
dipped
says.
that low again, but it's just it's kind of making lower highs here, not a very strong reaction. I liked the strong dip here, right? That looks trapped. We saw this bid step in.
Nick Timmeros, Wall Street Journal. Chair Powell, you've described monetary policy as
But
modestly restrictive. If the
no
unemployment
further
rate
reaction so
is
far.
roughly stable, inflation moving sideways in the
It's
high
kinda dead.
twos, with an ongoing overshooting services and non-housing services, not just goods, and the economy doing fairly well as you just outlined. What gives you confidence that inflation returns to target over the next couple of years?
Okay.
Bookmap froze on me
The
here.
rate is-
Goodness.
You can characterize it as in the high end of neutral, or you can characterize
I think my
it as
bookmap
perhaps
froze.
mildly restrictive, even
My
modestly
rhythmic data
restrictive.
froze.
No one knows for
My
sure,
footprint
but
chart's
it's in
still
that
moving,
range
but it's
where
like
it's somewhere
barely at.
around the borderline between restrictive and not.
Is it just ES? Is NQ froze?
Remember that a big
NQ's
part of
moving.
the disinflation we're looking for is just the runoff of
Looks like.
when tariffs are put into place.
Is anybody else seeing this
raise
issue?
prices.
Anybody else have rhythmic data and their ES stopped working?
The tariffs are paid by consumers.
Froze 2, shutting down.
On a one-time
Looks like
basis,
rhythmic
and we're
data
looking
on
for that-
ES is froze.
that process. It takes 8, 9, 10, 11 months, a year
Because
to go
I
through
see
those
ES
processes,
moving
and we're
with
waiting for
my
those
other data
tariffs
providers
to be
here.
put in place over the course of
Yeah, my other, I have Denali data and CME data on Tradeovate and Sierra chart. Both of those are moving.
so that goods
Looks
inflation
like
closer to what it's always been. It used to be for many
ES
years, it was
data
negative.
on rhythmic is
And,
frozen.
You know, the year before tariffs came in, it was 0, and it's running like
That's
2%
interesting.
now, so, and
I can't say I've ever seen that where the data just straight up froze. Wow, I don't think I've ever seen that.
Restrictive policy. It's coming
NQ
from
still working,
the one-off
and
runoff
it's
of a
ES
one-time
data
thing.
still working on my
So
other
it's
providers.
important to keep
Denali,
policy
Denali data
or, you know,
on
close to that
Sierra
level,
is
too
working.
restrictive,
CME
because
data
in the-
on Tradeovate is
downside risk
working.
in the labor market. We are balancing these two goals
Have
in a situation where the risks
I've
to the
never
labor
seen
market
that.
to the downside, which would call for
Other people's
lower
froze
rates,
too.
and the risks to inflation to
What the?
upside, which would call for higher
DX
rates, or
feed
not
is
happening
working.
anyway. So we're
Yeah,
at
I
different
use rhythmic
situations
data
with
here
what
on
the
Bookmap. It's froze. Other people saying
balance the risks.
Bookmap data
Feel like
works.
where we are now is just kind of on the
I think
border
God is
between
telling me to
the
take
higher
that base hit and walk away from this.
versus,
Dude.
non-restrictive. We feel like that's the right place to be.
Can I ask about core non-housing services though? Because there's some
That's
data
disappointing.
that hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services
me-
inflation maybe been slower to fall?
Try to re-add
That's
it.
a good question. It's, you know, it's frustrating. Labor, non-housing services have they basically moved.
Try to re-add it
sideways,
here.
They're at the same level. And we do expect that they will come down, but you know, it's a bunch of idiosyncratic things. But at the same time,
What happened?
that is one of the things we should be seeing. Because to your point, you know, the labor market is.
It's not even adding the
source of inflationary pressures, and
chart
that should
back.
really matter for non-housing services.
What the heck?
But we're not seeing progress there. So we do, you know, what we expect for.
All right, I guess we're watching NQ, guys.
For this year, rather, is continued.
I'll take a
progress
scalp on
in housing
NQ if
services,
something sets up.
Finally seeing that, you know.
It's kind of just stuck in the same range though as ES.
Because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we like to see. But it's, you know, it's a good question where we didn't see much of that last year.
I could still see it on my footprint chart, but I really like Bookmap is my top order flow analysis tool.
Revised down to negative 17,000 in January.
All rhythmic data frozen for ES, Gaggandeep said. Wow, that's big. I don't bro. I need to switch to the Bookmap data on Bookmap. I feel like everybody is having issues with rhythmic now. Rhythmic I've been using for years, man. I've paid them so much dang money. I have paid them $35, $40 a month for like the last 5 years. And this is how they treat me. That's crazy, man. It's not even like there's that much volatility at orders that should have triggered any kind of crash. That's weird. I wonder if they got hacked or something, maybe. Who knows?
Inflation, you know, you can we're at 3.0% core inflation.
Who knows?
2.8% headline. So we've been well above.
Selling coming back in kind of heavier here.
Whatever it is.
Heavier selling stepping in here, at least on ES on my footprint. Seen it here on NQ as well.
And that's a concern. You know, we need to get
Heavier selling stepping in here on ES.
And we need to keep focused on that, even though we do now face some new inflation from energy.
Yeah, I'm not trying to long this.
One of them is obviously more risk than the other.
Sign off and then sign back on.
What happens if there's no Federal Reserve
Let me
change
try.
confirmed?
Huge selling stepping in. Wow. My delta is going big red. It hasn't dropped price significantly yet, but big absorption here. It might break down, it might get absorbed in reverse. I don't know.
That's what we've done on several
Big absorption.
Is what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's book.
Wow. Rhythm is back. Yeah, I'm restarting Bookmap. Here it comes.
On the question whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think.
Look at this. So looking at the footprint here, huge delta just stepped in there from aggressive sellers. Price didn't break any lower yet, though. That was interesting.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks.
There we go.
Past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on.
What happened to my data? I can't see the prior price. Still loading.
Agree with that, and to what extent do you think we're in a different place today?
Now we're starting to see some bigger
It's really
volume coming in here.
The actual situation.
I don't know what the holdup was. Maybe people are waiting until this press conference is starting to finish up.
Disinflationary progress that we expect to see due to the tariffs that I mentioned. I think it's hard to say.
Yeah, I restarted Bookmap. For anybody else, thanks for the tip, guys. Restarted Bookmap and re-added it. It's back on now. It's still trying to load, but big selling coming in. Big selling coming in.
Report, that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate.
Here's that 6,700 prior low. I don't know if I'm looking along this with the heavy selling that's stepping in right now. Probably just gonna chill. Caught a few points on 7 points on that little scalp earlier.
The February jobs report was cause for concern.
So I think you have to take the two together.
It's interesting to me the size of selling that's stepping in here, and we haven't seen a very accelerated downside drop yet.
And the February report was a negative surprise. If you put them together, you get something.
It's definitely a lot of heavy selling coming in, though.
I'm sure realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned.
There's some big aggressive buying stepping in. It's interesting. Whoa, it flipped. Got overrun.
What has been the trend job creation over the past, let's say, 6 months? If you adjust that for what we think our staff thinks is,
that's not good for buyers.
Due to overcounting.
That's not good for buyers.
Job creation in the private sector, but actually, that looks like that's about.
See what happens here. Yeah, it's weird. It's weird action.
Very low, growth in the labor force, which,
you know, other than the 6,700, the only thing that I had here was potentially like a break and recapture. So a failed break and reclaim of 6,700 with aggressive buying for a scalp scenario. I don't have much scenario to chase it to the downside here. The only other thing I really see to the downside is this area around, 6680 to 6660s, which is the weekly low.
You can say the break even is zero, but nonetheless, it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is
a lot of selling
to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Some aggressive buying coming in now.
The economy's experienced a series of
Trying to
supply
recapture
shocks
the
in the last few
6,700
years,
potentially.
COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world?
Kind of want to try it again long here, but kind of don't at the same time.
Start taking account of the risk of supply shocks as a more common problem.
You know, we did go through a long period where the shocks were all demand shocks. And, you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing and a very much more difficult thing because it does immediately raise the question.
Yeah, I like the aggressive buying. I don't know. Something just makes me not
The world changed. I mean, COVID is
love
a
it.
one-time
Yeah, it
thing.
feels. I liked the first attempt earlier. There's some big buying coming in. I like the first attempt earlier, but there's a lot of big selling that's now stepping in. I don't know. Also might have kind of loss aversion now that I already kind of hit a little 7-point win. Nothing crazy, just a little win, but yeah, it's not super clear at this moment. I think what it is it's kind of slow, and then we see like sudden surges of orders, and then it goes back to slow again. So it's tough for me to read this volatility here on the order flow because it's like kind of weird surge of orders and then stop. Like it's just not easily readable. But when there's good volatility and there's good, price movement and lots of order flow, can read it really well. But in this, where it's like slow and then big orders and then slow, it's just hard. I can't really get a good read on it, to be honest. Just kind of random.
There weren't any ideas that had very broad support on the committee.
I don't know what's going on. Jay Howe asked. I don't know, bro. I don't know what this is. I've never. This is one of the weird. This is a more weird FOMC event as far as order flow. Yeah, absolutely, Adam. That is the danger in this environment, and that's why I recommend if you do trade in this, like I am potentially catching scalps in this, make sure you are position size and understand the risk that something could be said, price could rip. Always have a hard stop. I have a hard stop on. I use OCO orders. So the second I click enter, I already have a stop and I already have a target limit hard orders set, and that automatically trails for me. So my execution in this kind of conditions is super fast, and I have OCO orders for the stop and target, and I have it automatically trailing my stop too and profit.
The vast majority of participants don't see that as their base case.
DXY ripping higher and higher, Alessandro. Still talking about that? Let me see.
What was in the minutes that several participants indicated something very much like that conversation did happen. What was your second question then?
I was just one question there. But follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled.
Nice.
How much concern do you have about whether this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other
Crude is popping. I'm looking at CL crude futures.
Oil commodities,
It's popping off the lows. It was down at 94. It's popped all the way back up above 95, 96.
Like everybody else, we have to just wait and see what happens, and it'll come down to how long.
Looking at the crude futures, kind of popping into its close there.
And what are the effects on prices, and then how do consumers react to that kind of thing.
This might be a dud, guys.
I wouldn't speculate in that.
Little tiny scalp off of it, but mostly just a dud here.
And see.
Better. Hopefully now that this is out of the way, though, the big thing that I'm looking at is now that this is out of the way, potentially get some better. Hopefully now this is out of the way, get some better action maybe the rest of this week and next week. Maybe. No big sticker shock. Do you guys want to recap the scalp that I took? Some of the confirmations that I look for. So this was small scalp, basically a break and reclaim, failed break and reclaim initially. I liked the confirmations here, and I'll show you what I saw. So I got in at 67.1475. My stop was just about 3 points under that, around 67.12. Trying to pull it up on Bookmap here. All right, so we'll go through a recap here if you guys want, so you guys can get a good view of my exact confirmations, everything that I saw. So let's go through it like this. Let's go through context first, and then we'll go through location, and then we'll go through confirmations, just like I talked about with true momentum earlier. So first, and this is kind of invalid now, right? So I caught it for a little scalp off of this. So I had this key zone here that I was watching for in this area here, which was the value area low of that last 2 weeks, prior lows here, which we've now broken down. And then we had this balance range forming here. So I was looking for a reaction off this on the really ideally like the first dip into here, specifically around 67.15 or around 6700, which 67.15 is where I took it. And I was looking for just a quick pop back up towards this point of control, which was around 67.20, right? So that was the context and location. Location was this box here. The context was we had this balance area that formed. Location was we had this zone here around these prior lows. I was looking for a little drop in there to trigger a quick buying reaction back towards this point of control, which was towards the bottom area of this volume. Right, so that was the context there and location. And now let's talk about confirmations. So on Bookmap, what I was seeing here as we dropped into here, let's talk about it. So on Bookmap, I liked this surge of negative delta here, this surge of negative delta on the break of that 67.15 prior day low level, right? So there was that 67.15 level that I talked about, which was the top of that zone. I like how he dropped, and that really that zone was like 6,700 to 67.15. So right at the top of that, I saw this surge of negative delta here, and we see bids absorbing them. And on top of that, on this surge of negative delta, let's look at this. Look at the bubbles. So we saw a lot of negative delta absorbed by these passive bids. See a little bit less absorbed by these bids, and then we see a little bit less, right? So two things, at the moment, that's a sign of exhaustion, right? Where we have large selling, medium selling, weak selling on this surge on the break of this. So this was kind of a sign of exhaustion, at least in the short term. It was a short-term sign of exhaustion. Oh, thanks, Stephen. I didn't realize I had the wrong date on this. It's supposed to be 18, not 8. Appreciate that. So confirmations, Bookmap. We had the bids absorbing. This negative delta from these aggressive sellers. We had weak 1, 2, 3 prints here showing exhaustion. And then the immediate response was this fast, aggressive buying here, right? So I waited a second. I really wanted to see the 15 area recapture, right? So I waited a second, and on the pullback here, let's see, yeah, on the pullback right there, I took it long. This trade never really went red. It was pretty much instant green. So I liked it wasn't large size buying, right? The size of the delta bubbles wasn't large, but I liked how fast it was. It recaptured that level fast. And then on the pullback here, I took it and my stop was just under 12 here, right? So I was giving it like an automatic like 3-point stop. And I was just looking for a quick pop back up into that, back above that 67.20, which was that bottom of that volume shelf, which we can see here. And it was also the point of control, right? So as soon as we broke these highs and surged up there, my stop, as soon as I was up 3 points, so as soon as it was 1R, my stop got trailed just a tick above break even. And then my hard stop, my hard target triggered on that surge. So now let's take a look. Hopefully all that makes sense. Now let's take a look at the footprint chart. You'll see the trade. Let me zoom in here a little bit so we can get a better view. All right, so this was that impulsive surge right there. Look at the negative delta. You know what? I want to look at my other footprint. I like the view of my other footprint better. By the way, both of the configurations for these footprints are on YouTube. I went over videos here. No, so it actually wasn't that pullback. So I think I got in on this pullback and reclaim heat. Where was it? Here, maybe one of these, and it pulled back a couple ticks under my entry, which we can see here on the footprint. So what I liked was the surge and negative delta on the break of 67.15 right there. And I liked the aggressive buying that stepped in. We can see how this delta flipped here, right? And there, I think this small selling right here is what triggered my entry. I saw it start to pull back just a tiny bit with that selling there. It came back briefly for a second. I think so I was in the red like 2 or 3 ticks there in a couple seconds after, and then it ripped. And then the target was this 20 EMA breaking above that, this volume shelf here reclaiming into that point of control from that multi-week range there, just above 67.20. So as soon as the aggressive buying surged into there, and it was also around this prior high, right? So just a quick one and done scalp. Risk was about right here at that 67.12, right? So if I'm right on this type of scenario, it pretty much goes immediately, right? So we had the trapped selling at the low on that surge of negative delta. We had the delta flip here to aggressive buying. And then I saw a weak, tiny little bit of selling. As soon as I saw that, that was the entry signal right there for me. That weak little bit of selling there. Stop just under this aggressive buying here. That was more from Bookmap, right? So the stop loss was right there under 12, about 3 points. Targeting just 7 points back up into that higher volume area, point of control, lots of things there, right? I was kind of hoping we would see a bigger, more aggressive surge, and I would have pushed my take profit there a bit, but it didn't really. We didn't get as strong of a reaction as I saw, so I just left my target there, and it hit, and I took it off. And it's a good thing I did, because zoom out here, my take profit was literally the high before it dropped further. Zooming out here, you can see how from there, that surge into that area rejected, and it became, instead of a balance range reclaim, it became a break and retest out of that balance range now, right? But I didn't know which it would be. That's why I just took profit there. And ultimately, this also would have been a nice short. So similarly to the entry confirmations that I used to go long, look at the surge in buying there as we tried to reclaim that level. Did not do it, and aggressive selling flipped you know, flipped right back in. So technically I could have just flipped that right back around to go short there, since we failed to reclaim that area. Could have flipped that right back around short and targeted a break back under the lows. I didn't do that though. I think that was around the time that my book map froze as well and stuff. So I was like, no, I'm done. Or actually it was over here. I don't know. So this is my footprint chart on Tradeovate. I have a video on YouTube of how to configure footprint charts on Tradeovate. I also have these volume profiles set up on Tradeovate, and I have a video on YouTube here of how to set that up as well. And that's where I came with, that's the tool that I used to come up with these key areas that I was looking for reactions off of. So now, let me pull that back up. So recapping the context here, we had this pretty large balance range forming. I was first looking for that setup to just scalp a pop back to that point of control there. Okay, that worked for a scalp. Thank God I took it off for a quick little scalp, because it ultimately then rejected, and now we're broken, and we just held a retest now, potentially going to break down further. Right. So I was first looking for the reversion back into this point of control, but now what's formed is now we've kind of broken this zone and possibly looking to break and retest outside of this zone. Possibly. We'll see what forms up here. My problem with that is just that price is already pretty extended on the day. So, you know, trying to play a late day break and retest for more downside after we've already traded this far down, I just didn't like that as much, even though it's possible that we could just keep breaking down. Does that make sense to you guys? So let's zoom out here a little bit on Bookmap, right? So over here on the session volume profile, you can see now all of this aggressive selling right here on the break. So this is that consolidation range that we saw between like 67, 20, and 40 here. See all that volume built up there. Now we broke under that, and once we did actually break under that, you can see all that aggressive selling, and we popped back into there right around here and have continued lower. Trying to retest back up into here again, but it's a little too extended, a little too late in the day for me to kind of want to chase that down. So it was a 2-to-1, 3-point risk, 7-point reward. So little base hit, no big deal. I'm gonna mute this now. All right, guys. I'm honestly not gonna probably watch this into the close here. I'm gonna probably wrap it up. Hopefully that was good value for you guys. Analyzing volume profiles, order flow. You guys got to see a full breakdown of a live trade in real time. Good to review it. Confirmations, context, location, confirmations. Right? Not every trade is a huge home run. Sometimes they're just little scalp base hits. It's actually my first trade of the week. All right, guys. For those of you that are in flipping futures, I will see you guys over in Discord, and we'll be back on the live stream tomorrow. We'll be back in the pre-market here on YouTube. For those of you that are interested in learning more in depth about order flow trading, if you're not already in the private mentorship group that I run, the link is in the The link is in the description below. It's extremely affordable. The price is actually going up. I'm going to be restructuring the price structure for that here probably like next week. So just a heads up if you guys are interested in that. That affects no one that's already in the group though, right? But thanks for tuning in. I hope you guys get value out of these streams here on YouTube. We'll be back for the pre-market analysis tomorrow at 8:45. So I recommend jumping in there if you haven't already taken advantage of that. And thanks for tuning in today for this session. It was a little bit of a boring FOMC event, but hey, it is what it is. Can't control it. All right. I'll see you guys tomorrow. Peace.